So it's a super cool product. Take the equity loan, or if for some reason you haven't already refinanced and it makes sense to do it, let's say you're paying off other debt and you want to refinance it all into one and then pull cash out for this, you can get a cash out refinance. Actually, you can do a rec loan with cash out too, or a home equity line or HELOC. Pull the cash out and then use a DSCR loan to buy your investment property. And the cool thing about investment property is, from a borrower standpoint, you're way, way, way less rate sensitive. Now, I'm not saying ignore the rate. I'm not saying negotiate the best rate. Not negotiate the best rate or best loan program available to you. But what I'm saying is, when you're buying an investment property, you're looking at the cash flow. So if the tenant is paying the mortgage anyway, the difference between a 5% or a 6% interest rate, it's really, semantics, because you're not paying for it anyway. Absolutely, the lower the monthly payment, the more cash flow you get. But when you're looking at investment properties, there's a broader range when you're trying to make sense of it from a cash flow standpoint, because it's not coming out of your income to service the debt, if that makes sense. You're making sure that the property cash flows to a point that you're comfortable with. And with the DSCR loan, the lender wants to make sure it's a 1-to-1 ratio. They'll actually go down to a 0.75 ratio, which means it can have negative cash flow, but there's other underwriting guidelines that come into effect with that particular program. But if it's a 1-to-1 or better, meaning it pays the bills or it generates positive cash, then it's a fairly painless process to get the DSCR loan. And it's a great loan program for investors of all experience levels. So to summarize, you can do a home equity line of credit, a home equity loan, or some type of cash out refinance strategy on your current property that you mentioned you had a ton of equity in. Take that equity and use that as the down payment necessary to qualify you for one of these DSCR loans. So I hope that answers your question. If it doesn't, give us a shout. 561-291-8569 is the Anytime hotline. And actually, I just want to clarify, by anytime, I mean anytime. It pushes to my office during the week. It rings here in the studio during the show. So not the main number. It rings to the bat line in the office, but it does. We are able to catch you during the week on the Anytime hotline. So hopefully that helps. We're seeing a lot of people capitalize on that DSCR loan. It's a great, great, great loan product for first time and seasoned investors. So if you have questions around that, give us a shout or hit the website, www.mr.mortgage. So one other thing when buying investment property to keep in mind, and we touched on it last week, and I don't remember who the caller was, but they wanted to know what the minimum down payment for investment properties is. And for that particular individual, they were going to move into one of the 4 units. So in that case, a 1-to-4 unit that you're going to occupy one of the units, we can treat it just like a primary residence. So as little as 3% down with a conventional product, or 3.5% with FHA, or 100% with VA, and you're into an income producing product and or income producing property. So this is what I'm talking about when I say read past the headlines to find the opportunity in this market, because even in those high interest rate environments of 1981 that I referenced in the first segment, people were buying and selling real estate, and surprisingly enough, real estate appreciated in 1981. So the cost of money alone should not be a factor. It should be cash flow. It should be budget. It should be your long-term goal. So hopefully that answers some questions. We're going to be right back on the other side of this break. Visit us on the web, www.mr.mortgage. That's www.mr.mortgage, or call us at 561-291-8569. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. but I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. Woo, I didn't know I could sneak to the men's room and back in just 2 minutes, but I did it. So, hey, my name is mark-eitel. Super excited to be with you. I host the Mr. Mortgage Show. Dom, my producer, and I do this every week right here. Same bat time, same bat channel. So we have reached my favorite segment of the show. We're going to do the rapid round of questions. I know they get kind of stacked up because I like to explain everything in detail. So we're going to try to burn through some questions. If there's something that requires a full explanation, I'll give it to you, but I'm going to try to get through the stack that we have in front of us. So let me throw it over to Don for the, or Don. I'm sorry, Dom, throw it to Dom for the rapid round of questions.
I have Susan and Tom who sent in a text. They're asking, we want to refinance and pay off all of our debt. Are there restrictions of what we could pay off?
Hey, great question. And the short answer is no. As long as it meets the loan to value requirements. So whatever we can lump in there, car payment, credit card, student loans, your dental implants, your, I don't know, Tom, if you've got, bookie bets, or what do you call it? You've got some outstanding money due to the bookie. We can lump it all in there, and you can pay just about everything that you have off, assuming that it meets the loan to value ratios. So questions on that, just give me a shout, and I'll be happy to answer it. But quick answer is no. It does not matter what you're paying off. So let's throw it back over to Dom for question number 2.
All right. Terry sent us a message. What are the negatives to a reverse mortgage? I think we're ready. I'm just a little unsure.
Hey, Terry, that's a good question, and I'm not going to rapid you on the answer because that one's important. A reverse mortgage is an amazing, amazing loan product for the right person. And I understand your hesitancy because they're confusing. It's not a normal thing that we grow up understanding. It's something that we address often, only once later in life, and it's new to a lot of people because it only gets addressed one time. So I'm going to answer your question. There are a few things that we get asked a lot. So I'm going to share some very general concerns, and some of this might speak to you. So one of the very big concerns people have is, can I still leave the property to my heirs? I guess the question is, does the bank own my property? You're not selling your house to the bank. What you're doing is you're taking a mortgage, but you're deferring any payments. So you're essentially not making payments, but because of that, the balance grows, but you're not making payments. So it's a loan against your property. So if your property is worth $400,000 and you do a $200,000 reverse mortgage, and at your passing, let's say the mortgage has grown to, I don't know, $250,000. You can leave that property to your children or any heirs, and they can inherit the property just like they would if you had a normal $250,000 mortgage. See what I did there? I used the elevated balance because that's what it had grown to at the time of your death. So That's a big one. Can I leave the property to my children? Yes. What are their obligations on the other end of this? It's the same as any mortgage product. They have to satisfy the lien, and they're either going to take ownership or sell it, and then just get the equity as net proceeds. And that's another question. Can I sell it? So yes, you can take a reverse mortgage today. And let's say 10 years from now, you decide to go into an assisted living facility, or you're going to move in with your kids because you want to be closer to them and they want to care for you. You can sell it. There's no prepayment penalty. There's no commitment to this, just like a normal mortgage product. So again, the balance grows because you don't make payments, but you can sell it at any time. You can freely give it to your heirs. When I say freely, there's still a lien against the property, but there's no restrictions in it going to your heirs, transferring as it would with a normal mortgage product against it. And then, yes, you can sell it at any time, pay off the mortgage, move to the assisted living, relocate somewhere else. So those are common questions. Another one, a big one, is what happens if I owe more than it's worth when I die? And this is a big concern for a lot of people because everybody wants to leave their kids their property with equity in it. It's a goal of all of us. I know, I talk to my mother and that's what she wants to do. We're blessed that our parents want to leave us equity. But here's the thing. If for some reason you outlive the equity in the property, let's say you live 30 more years and you owe the loan has elevated to a place higher than the value of the property, or let's say we go through what we did in the early 2000s and property values go down and now the property's worth less than you owe, and you pass and you leave it to your kids, there's no obligation to the heirs. The loan is insured by the federal government. It's a product of FHA. So the loan is paid off by the insurance policy. That's part of the closing costs. Your heirs just give the keys to the bank, and they don't have to sell other assets in your estate to satisfy the deficit because there's no obligation beyond the insurance policy that insures it. So that's a little bit of a ramble. The answer is if you owe more than it's worth when you die, you just give the keys back, and it doesn't encumber any of your other assets in your estate. Those are pretty typical questions that we seem to get the most often. The other one is, how do you access your cash? And you can receive a lump sum payment, you can get monthly payments, or you can receive a initial payment. So you get an initial payment and then an equity line to draw against. So hopefully that answers some of your concerns. And listen, take all the time you need to make this decision. We never, ever, ever rush anybody into a reverse mortgage because it's a big, big decision at a very critical time in your life. But I can tell you this, we're seeing more and more call for it in our lending practice. I'm proud to do them. I believe in the product, but again, they're not right for everybody. But if they're right for you, they can make all the difference in the world. And with the inflation pressures that are on fixed income individuals and all of this newfound equity, it's really a good time to do it, because when your property is evaluated for how much you can get in that reverse mortgage, it's evaluated today at a time that it's never been more valuable. So you've never had more equity to access for the rest, to live out the rest of your life. So hopefully that, sets you at ease, Terry. I encourage you to give me a call. I'll spend all the time you need to walk you through this. 561-291-8569 is the anytime hotline. And again, that'll push to my office during the week, or visit the website, www.mr.mortgage, and we can address this off the air, because I am happy to answer your questions and walk you through it. So, hey, Dom, what else do we have?
All right. We have an email from Letty. Letty's asking, my agent is telling me I need to put 25% down to buy a condo. Is this true? Are there no other options?
Hey, Letty, there are several other options. So what's happening in the condo world right now is, since the Surfside collapse, the condo questionnaire has been beefed up, because that was evidence of what can happen when the structural maintenance isn't done on a building properly. So there's a big concern that lenders have: are we lending against the next building that's going to collapse? So in that questionnaire, they're speaking to a lot of things that have to do with deferred maintenance. Now, most association members are just civilians that live in the neighborhood, so they're not engineers, and they're not comfortable answering questions about structural maintenance, deferred maintenance. A lot of these associations are being coached not to answer the questions. So if the questions aren't asked